Hi guys, this is Nikki, you also know as Faces Trader, and you're watching the Global Market Update. It's the Awesome 10X channel. It's December 4, 2020. Okay, so let's begin. All right, last night, actually, there were a lot of good news that happened. You could see that Zscaler was up 20% last night. I'm going to show to you that company. Zscaler and CrowdStrike, of course, rallied something like 20% last night after earnings. So this is Zscaler, 26% up. You could see that if you've invested in the right cybersecurity names, you are up from about $40 to nearing 200 or times 5 your money. Gap up here and a lot of gap ups here, and this is an all-time high. Let's read the earnings report of why Zscaler soared 26% last night. So let's read it. Shares of Zscaler skyrocketed on Thursday after the cloud security company delivered excellent first quarter results. Zscaler's revenue surged 52% year over year to $142 million as the COVID crisis prompted more companies to shift their operations to the cloud. I believe our financial results demonstrate Zscaler's pivotal role enabling digital transformation journey, accelerating at a pace never seen before. This is what CEO Jay Chaudhry said during a conference call with analysts. So Zscaler has also become more profitable as it has been expanding its revenue base. Net income improved to $20 million, up from $5 million a year ago. Cash flow increased $53 million and $42 million respectively from just $21 and $9 million last year. The tools help businesses grant employees secure access to their cloud-based applications. With many people working from home during the pandemic, companies have turned to Zscaler in droves to protect their digital networks. Moreover, while coronavirus vaccine help people return to traditional work in the months ahead, the shift to the cloud is a long-term trend that will continue long after the COVID-19 crisis subsides. Investors expect Zscaler to continue to grow briskly in the coming years. Zscaler is one of those COVID pandemic beneficiaries, as you can see. Yes, you've got Zoom and, of course, Zoom and Zscaler. Zscaler is not cheap. It is trading at about 50 plus times price to sales, market cap of 20 billion. More importantly, it's actually a monster stock in the last how many years? So in the last 2018, you could have bought this price at about $20 to $200, a true 10x move. I think like it's just notable for you to know that if you don't know about this company, that you've missed out 10x. Should you buy it at about current levels of $185? Probably no. But if you have it, just hold on to it. Let's give another company that actually reported some numbers. Docusign was up 6% last night. Let's read that too. So Docusign, after a blistering, it has rallied already this year, something like also nearing 10x. You could see that from 45 here. That was about 2019. Yeah. So this was a part of the crop of IPOs last year, along with your Zoom video. Docusign and Zoom video are like synonymous. Not 2019. I think it was moving as early as 2018, but people were really recognizing that Docusign and online signatures was a secular trend. So this was around $40, and then right now it's trading at $230. Not yet hitting at $400, but I think that secular trend is there. However, do you really pay up for these expensive companies? It's a $42 billion company today. Let's read the news. Okay, why is it up 6%? Okay, let's read the earnings transcript. The good thing about them is that they really passed their earnings calls. That's why they were up. However, if you're gonna chase them, I'd say that it's not a good idea. It's more or less good for the people who hold on, who have it. But for those who don't have it, probably just know what happened. Let's read it. Okay, the transcripts of the last quarter. Before we, let's see. So it was another exceptional quarter. Let's see. Quarter on quarter, 63% billings growth, year-over-year revenue growth of 53%, record levels of profitability. Our international business showed substantial strength. We landed 73,000 new customers, bringing our total to nearly 822,000 worldwide. Docusign is at the highest levels that we've seen to date and yielding a net revenue retention rate of 122%. So what you are seeing here is that all these great work from home stocks are actually doing well and the earnings are doing well. And you'll notice that one common denominator with all of them is that Zscaler, Docusign, even CrowdStrike, all of these are trading at quite expensive levels, which is why I think that given that all these great numbers are able to get a 6% and 26% move. I think though that that means that people would actually buy Zoom video here at about $400 and not wait for 350, given their attention to actually like companies that are growing and growing, because these revenues are sustainable even after COVID pandemic. So actually, what happened last night, in my view, was more of a confirmation that the market, because I thought that, if Zoom video is gonna fall, would it mean that your Docusign, Zscaler, and CrowdStrike, all of these great work at home names, will they actually it's not work from home names. It's really it is a COVID-19 beneficiary, but do we actually sell them when they're up 400, 500%? We got the answer last night that the market is really not willing to sell all these wonderful SaaS companies. So that means that SaaS companies, like even your IPOs like Snowflake, would continue to actually trade expensively, even if you, whether you like it or not. Does this mean that these companies that are expensive will continue to be expensive? Chances are yes. That's why, although I don't want to buy them because they are expensive, I don't think that it is also, so the dilemma there is I want to buy them, but the problem is that I just can't get a good entry. So all of these great names are wonderful, but also at a very expensive price. Wonderful company at an expensive price. Usually I don't care. It means that they're just wonderful companies. But given that there are so many companies in the market anyway, I will find my best way to get a great company without paying too much of a premium, if I could. So we'll see whether we can. So far, actually, there's a great company that isn't that expensive yet, and you could see that the answer there would be at least these companies. At least your Fassi and Datadog aren't that expensive yet. Fassi is back at $82. Well, that was just back to July. And if you take a look at all the analysts downgrading this company, usually they're saying only that it's expensive. However, in my view, in the next couple of months, just like how expensive Docusign, Zscaler, CrowdStrike, and all of these great SaaS companies are, eventually there will be a buyer for this company. And well, you can enter something like that as low as $80, then it's more of a buy. What else are great entities that you should consider? Okay, with everyone assuming that this COVID-19 pandemic is over by 2021, it's over. How did the market respond? You'll notice that the market has been responding very well on your reopening themes. Case example, your airlines were very strong last night. American Airlines was up 8%, and you could see all the airlines were. So this is a very, very strong, sharp move. And more importantly, this is the very first breakout above the last how many months. So yes, you've got this $22 area selling, but you could see that the pressure for the market to go to value is very high. So as I really thought that there will be a tech rotation to value. However, what happened was value just went up, but tech rotation not necessarily go down, meaning, there's just money overflowing in the entire market. AAL was strong, UAL was also strong. You could see that the airlines as a group were very strong, even your Boeing Airlines. Your Boeing Airlines was up 10% last night to about 240. Oh, well, I think it's 10%, sorry, because I've been watching this since 200, no? So notice that this was 200, there was a breakout there, and then it's now 240. So you could see that there is a strength in the arena of these sectors. So Boeing also popped on a Ryanair deal. Yeah, there was a news here that Ryanair was gonna order some air fleet from them. So actually, that was a good news for the sector. So if you think about it, the current pandemic reopening themes are really playing out all very well. TripAdvisor, 40%, 20 to 29. I'll show you a couple of things in my watch list on the reopening theme. Asian shares hitting record highs as US stimulus seen within reach. Actually, that is also a bullish take on your value names, given that Asian shares are typically conglomerates with large properties and large banks. So you could see actually worldwide that the biggest moves have been even like the likes of just real estate firms. So especially in Hong Kong, you could see that in Hong Kong, the movements are coming in the REITs, the movements are in the property segment. So really, they are called traditional entities, and these are called dinosaurs in my view. However, the fact that they are rallying means that the reopening theme is very much in play. Take a look at the value names. I'm going to show to you the value names that I'm taking a look at in my watch list. Some of them I own, some of them I don't own. The fact that Ralph Lauren is trading 8% right now, and more importantly, that is just a day. In the last month, it's already up something like more than 20%. Take a look. Nordstrom is up 132%. Department store 78 and 74. So the best in the month were actually some department stores. Nordstrom, Kohl's, Macy's, and then some luxury stores continuing higher like Capri Holdings, designer brands. Earthstone Energy and Oceaneering are energy-related names, up 50% for the month. Berry Petroleum also up 50% up for the month. Cathay Pacific is up 40%. PVH is your Kate Spade and Calvin Klein. It's up 40%. So you could see that GameStop has been rallying for quite a year now. In fact, from 4 to 18. So times 4 almost. TripAdvisor rallying, American Airlines rallying, Ralph Lauren rallying. Even your energy names like your ConocoPhillips, your Royal Dutch Shell up 30%. BP, British Petroleum is 35% up. Your Delta Airlines is up 35% up. Even value names such as General Electric is rising 30%. So this tells me actually, guys, that there's a very, very much value-related move in the market. And your portfolio, if you want it to actually be a suitable defensive portfolio, you want to actually be betting, well, nobody's still betting. The fact that it's up 100%, you might think that you're late, but actually they're down even after that 100% rise. Let me show to you that example. Nordstrom, Kohl's, and Macy's, even if they're up 70 to 100%, they're very much down year to date. They're down 20%, 30%. So you actually want to do something like this. For Macy's, you should be looking more into buying them on a dip. So buying some of these on a pullback is actually more beneficial to you. So far, yes, we most of us have this already. Our inner circle has Macy's at about $7. Some of us even picked it up at 6. So we actually reiterated a buy on Macy's even as high as 9. So we're correct. It's up like 70%, right, for the month. So 6, 7, 8, 9, 10, 11. It's probably nearing $12 soon. But if you're catching it now, only buying it now, you are a little bit late, but not too late. So I think like Macy's goes to $14. However, you want to get a good risk-reward ratio for yourself. So here's the thing. I was actually willing to buy Macy's at about $10, $10 below. So this was $7.50. Let's say you bought at $7.50. Where do you add? It's either 10 if you can get an entry for a move up to as high as 14. So can you really make a 100% move on reopening themes like a Macy's department store? My answer is yes. So take note that this came from about $40 all the way to $6. There is room for some rally, even if it can just rally back to about $14. So those are the things that I'm taking a look at. I'm now going to check your questions, if any. Hi, Miss Nikki. Good morning. Good afternoon. Your thoughts on Canadian Solar. Canadian Solar has a resistance of about 44, but very strong support in my view at 38. So you've got that resistance areas. Lemonade is now $80. Hi, can you give me your preview on Lemonade? Geely Neo, please. Okay. You know, Lemonade actually surprised me on the upside. I thought that actually that $70 was really a problem, but last night after earnings call, Lemonade was trading at $80. Good that you asked. So this is actually an earnings-related play. Lemonade, we actually were bullish at about 45, 46, even as high as $50. And so this 20% move is a confirmation that we were truly buying the right company. So I thought really that there was a mistake because it kept on getting down. Take note that at $70, it was always being sold down. Here, 70 to 45, that's okay. The first time it went 70, I thought that we were already correct because we were buying here. Remember when we featured Lemonade as a free Friday class pick? For those who don't know, okay, you can just go Lemonade, Awesome 10X. You can see that we recommended a buy on Lemonade here at about September 18. So that was essentially here. September 18 was here. We were buying here at about $46 to $50. True enough, after a month, it rallied to $70 or up 40%, even if you bought at 50. The problem was it fell down to 50, so we didn't know were we right or were we wrong on our thesis. But some of us were just, holding on to our shares. But the moment it got back to 70, some of us were critical whether 70 was really a resistance. So unfortunately, the reality is some of us were thinking, are we really wrong that Lemonade is expensive here? So some of us sold some Lemonade at 70, not knowing that tonight, of course, it went to $80. So here at $80, this only shows to you that $70 is really a support. That resistance is now really the new form of support the current highs of about $90 to 100 would be the only high. Now, why did Lemonade go up? Earnings. So the insurer Metromile will go public using a blank check company, another company that will fight with Lemonade. Lemonade stock falls even as results beat expectations. So this is a little bit it's a little bit weird, right? When it came, when the results were out, people sold it down at $63, and then the day after, people understood maybe further, and then Lemonade went up to 80. So I guess all of these is really related to earnings results. Me personally, I think Lemonade is a great company. So I think the movement last night just confirmed that Lemonade is really more that should be bought and held. So if ever Lemonade falls back to 70, I'd say we'll try to re-enter that name. NIO, I think, just like all the Chinese electric vehicles, are getting sold down. However, in my view, that sell-off on your NIO, XPeng, and the Auto, those are really just profit-taking after a very blistering, strong move this year. So with all the electric sector, I'd say that they're profit-taking. So NIO has a resistance right now at 45, right? You've got a support for NIO nearing 35. You just really want to wait it out for the sellers to finish their selling off. So definitely one of the biggest moves this year was your NIO. Came from bankruptcy to a lot of non-bankruptcy, and then many buyers, and of course great numbers, which propelled it to go from $1 to $55. Yes, that is a 55x in just 12 months. Now, what do we do with NIO? I think like right now, you could see a very clear support at about 38, can even go to 35. However, very strong resistance as well at $50. So current level of 45 does not exclude the fact that some people will still continue to sell this off. So in the short term, you could see potential sell-offs here. It's going to be a trading range. Can even go to 35. Maybe it can even go lower to 30. But I think any drops is actually a buying area. So NIO is actually one of the leaders in the Chinese electric vehicle market. GD is actually also a Chinese electric vehicle market. This is not as big of a move like NIO, but also you can see that 10, 11, 12, back to 24, still 100% up. But these are just normal consolidation. I think that any drops back to about $20 will be picked up, but there will always be a seller 22 to 24. So the easy money, in my view, is already done for now, and probably consolidate for the next 2 to 3 months. API is making moves. It will be a winner. Well, I personally like API. Agora is something that we like as an Awesome 10X pick. However, I don't know if it really go up. So it's been sleeping for a while now. Been buying since here, 38 to 42, rallied to 55, sold some here, and then bought back about 45 all the way to 38. So just really here. So right now I'm just waiting out my position. And yeah, right now I really think it's a good company, but we'll have to wait it out. Is Candy a good buy or is it a fraud company? I didn't study Candy, unfortunately. So I think Candy is it an electric vehicle related company, KNDI? So I don't study all the Chinese. I'm not even sure I'm not sure what type of electric company this car is. Is this a car company, Candy? So I didn't study this. Is it in so I didn't study, so I can't really comment. 4016 spike down. Usually those just from a charting perspective, looks like the fact that nobody's willing to buy it seems like many people are iffy about its fundamentals. I didn't study it, so I can't really answer. What's your view on Futu and Zoom Info? Zoom Info I didn't study, so I don't have an answer there. Futu I think is a good company. So I think Futu, I have this actually. Futu, I have it at $30 below. Right now it's trading at about 42. 42, yeah, it had a resistance at about 46 recently. But I think that this one will consolidate for a while. The so-called Robin Hood of China, right? So brokerage firm. In my view, brokerage firms are fine as a business. And okay, it's fine. You can see technicals tell you it's neutral. It's neither here nor there. You've just simply got some profit taking right now on Futu. Let me show to you guys the chart of Futu. Futu Holdings went from about $10 to as high as $50 this year. So very strong move. This is just a normal profit taking. Take a look at the monthly of Futu. Capital markets, finance basically. So from 10 to 50, it could go down. Definitely can go down below 40. However, I think that the trend is still different. You've got a good secular up move here on your brokerage firms in China. Okay, is it still okay to buy Alibaba? Are you gonna buy Splunk on the dip? Okay, Splunk was actually interesting, down 20% last night. I didn't study Splunk. However, I know that Splunk is a part of the cybersecurity names. So sector-wise, I would actually put a look on Splunk. I haven't answered. I can't answer. I haven't really gone deep dive for this name. But it's still trading 160. You see, the problem with these cybersecurity names is that they were never cheap to begin with. So sometimes they could fall 50%, just like what happened with Fastly. So even if 20% down last night, I don't think that it is a bargain. I'd wait it out. Yeah, but I might actually take an entry on Splunk in the next couple of months, maybe next year. I'll give it time. So usually when a bad earnings happens, and if I like the sector anyway, I will put it on my watch list. But it's not a buy for me immediately because all I know is that Splunk will not go up anyway. And even if it goes up, there is limited upside. Splunk, even let's say, even if I buy at 160, even if I'm right that it goes up, well, I'm not interested to make 20%. Usually I'm interested to make a lot of money. So I'd rather wait it out. Whether I can enter at 140 or 100 or even 120 at the very least, I'll wait it out. So I'm going to try to read the earnings, given that I can buy it near March lows. That might be a good area. Plus the fact that, of course, it only looks cheap in the current day. You should understand that Splunk has been rallying for the last how many years? From about $30 to about $150 or times 5. I need to understand first whether I should buy a 500% move in the last 4 or 5 years before I buy. So is it okay to buy Alibaba? Alibaba has a resistance at 300. I don't think that you will have many earnings report on. I mean, in the short term, I don't know much about Alibaba. Why didn't Snowfall their earnings suck? So this is really the weird thing about the market. Sometimes a very good earnings like Agora is not being taken, is just being taken for granted. Sometimes like a lackluster earnings report is being sold down aggressively. So you know how the market reacts is sometimes a weird thing to me as well. That's why I'm actually willing to buy sometimes the bad earnings if I truly believe in a company. So recently, actually, if you recall, Agora was sold down in a very, very good numbers. I actually bought some Agora at API. Agora, I bought it at about 38. I have it already at 38 to 42, rallied to 55, got in back at 45. I still added more at 38 when I saw the earnings. The thing about Snow not falling, I don't know much. I just think it's expensive, but it can go more expensive. So I don't really care. If I don't have it, doesn't matter. But I think twice when I buy, because when I buy, I'm not really buying it to sell it tomorrow. So example, if I buy Splunk at 158, even if it went 180 tomorrow, I wouldn't sell it like other traders will. So this is the reason why before I buy, I really think. So I'm not buying it, not because I don't like it. It's just that I haven't studied it thoroughly. So with Lemonade, it's easy for me to buy it because I've already studied it. Meaning if it's $70 below, I'll buy it. Thank you very much. Bye-bye. Don't forget to like and subscribe. It's a free Friday class. So we'll see you later at 5:30 p.m. as well. Bye-bye.